Hello everyone, how's it going? In this video, we will talk about GTII, its trading potentials, if the stock deserves to have a place in your portfolio, and why there could be a massive gain that's possible from not just the ongoing short squeeze, but the company itself. Before I begin today's topic, if you appreciate my content and would like to support my channel, please give my videos a like, comment, and subscribe to my channel. Also, please consider to take a look at the affiliate links down in the description. For the Amazon link, you can simply save it as your bookmark so that every time you purchase anything from it, a commission can be paid to me without additional costs for you. Thanks for your support, it means a lot to me. And with all that being said, let's start today's video. So, over the past few days, the price action of GTII has actually, I would say, surprised people in a nice way. It's currently just right below $2 level, and that in a bearish market for a company that we're not even sure how long they can last is a solid performance overall. Now, we have to remember that the price action is maybe not everything, but a lot in the case of GTII, because it's going to be a self-fulfilling prophecy eventually. What do I mean by that is, because the attraction of GTII seems to be the potential volatility that it has, and the fact that this stock has a sizable portion of its volumes in the shorts, if we can ever manage to trigger a point beyond which there will be a lot of redemptions, well, we're going to be in the money. Okay, it's going to be golden for us. And this is what we definitely want to see happening. So, beyond the long-term speculations, I think that, well, actually, it's a funny way to say, but if we don't look at the long-term outlooks, if we only focus on the now and today, would I say that this is a stock with a lot of promises? Yes. Is this a stock with a lot of potentials? Absolutely. Do you want to buy it? It depends on your risk profile. But if you're watching this video, chances are you are in the penny stocks. You are in the small caps. You are in the stocks that you think have a potential based on people's emotions and not necessarily the cold hard numbers. So if you're one of those, then I would say by all means, take a deep look at GTII. Global Tech Industry Group, trading under the ticker symbol GTII on the OTC market, is a company based in Nevada focusing on acquiring growth and startup companies to build a portfolio of holdings in promising companies that'll shape and make tomorrow's economy. Simply put, it is an acquirer whose value depends entirely on the quality of expertise, assets, research, and people that they can manage to buy within the sectors that they choose. The reason why this kind of structure can be attractive is because the narrative can be very flexible, which can be adapted to whatever is trending in the market at the moment. Now, of course, if consistency and continuity are non-negotiable values that you hold dear to, this may not be the best stock for you, but for market participants who simply want to make a quick buck by buying low and selling high, this is actually a pretty smart position to adopt. I mean, in a way, GTII reminds me of another company that we have covered before on the channel called Ideanomics, trading under the ticker symbol IDEX. It may not have the same kind of purchasing profile, but ultimately their value on the proposal relies on a company's capacity to retain valuable assets with high potentials to be popular and trending topics in the months and years to come. It is like putting your money in a publicly traded VC fund or early-stage business incubators, because the investment can be done at a very early stage. The equity can be very inexpensive to acquire, to be later sold during a different economic phase. That is essentially the reason why companies like GTII have always interested the market. It's not always because we believe wholeheartedly that those kinds of companies are going to be succeeding. It's just because the narrative can adapt. With that being said, those kinds of companies obviously come with their own risks, as the lack of trust in the market, or put it more simply, the lack of demand for risks, can really hurt its stock price. If the market remains bearish, then many titles might be losing value, and it's going to be a matter of time before the capital becomes more risk-averse than ever and would collectively prefer to go into safer assets, guaranteeing a yield. This kind of situation isn't only bad for fundamental perspectives, but also from a financial perspective. It can force companies to get funds either with higher interest rates or from companies that have a shadier origin or shadier business model. This is precisely what happened with GTII. So some time ago, it entered into an agreement with a company with a pretty steep track record in doing this kind of thing to companies they lend money to. They know that those companies are in difficulties, they short sell their shares, and they make profits both ways. Interest on one hand, profits by short selling on the other. And in the end, because the market tends to be a self-fulfilling prophecy, whatever they think will happen will end up happening if the position size is big enough. So a stock can be borrowed from brokers, sold in the market, and be bought back later, hopefully at a lower price than when it was first sold to make a quick buck. Unlike the typical long positions though, a short position will generate financial fees that need to be paid periodically to keep the position open, which would further motivate the short sellers to buy back the positions if they spot a move against their position, regardless of whether it can be justified. This is another major attraction of GTII. It has an important short position stacked against it, which is another way to say that there is a high potential for short squeeze to occur, which may force many short positions to be redeemed so that the short sellers don't suffer massive losses. We have to remember that if a long position has a potential loss that's between the entry price and zero, the potential loss for short position is theoretically much larger, between the entry price and infinite high, in addition to the financial costs payable to brokers if the position doesn't close. With that being said, GTII obviously offers a lot of potentials and opportunities in the upward volatilities. But we gotta remember that we have to stay vigilant about the market mood, both in its own right and towards GTII in particular. We also have to remember So my recommendation for GTII overall is that yes, it's a good stock to be had if you're specialized in buying and selling penny stocks or buying and selling small cap stocks and buying and selling of short squeeze or short squeezing scenarios. Like these would be the promising type of things to tap into. With that being said, do you want to invest in GTIs long term? Let's say you want to. Okay, let's say you want to believe in GTI's long-term future. You want to believe that it's going to be a company that's going to hold all sorts of gems. Well, if you believe in that, then I would say that your purchasing period should be far longer than just a few weeks. It's got to be measured in terms of years if you believe that GTII will eventually succeed. Remember, we still have a major storm to weather in front of us. Maybe with the end of SVB, we're going to see the end of the inflationary mentality, okay, or the anti-inflationary mentality. But if that's not the case, then the bigger crash is yet ahead of us. So I would say that it's going to be a go for the short-term speculations, but for the long-term investment, we probably still have to wait for a bit. And regardless which one you're choosing, the maximum exposure I would recommend would be around 1% of your portfolio, top max.